Hello, I'm Finola Burke from RaaS Research Group, and today we're focusing on Energy Transportation and Storage Solutions Group, Provaris Energy, ASX ticker PV1. Joining me to discuss recent progress with the company is CEO and Managing Director Martin Carolan and my colleague Andrew Williams. Welcome, Martin and Andy.
Morning.
Yeah, hi, Finola.
Good to have you both back. A key element, Martin, for the business is tank fabrication and testing, which is the nexus between tech and engineering and commerciality. Can you give us an update on the progress of tank fabrication and testing, and how is that progressing in a practical sense, and the anticipated timing of outcomes through the early course of 2026?
Yeah, thanks, Finola. Well, I've actually been here in Norway for the past 3 weeks, and I've just come back to Oslo from 3 days on site, and we've had 2 trips during the month of November. I can say, as we've reported, all the final commissioning activities have been now complete. We've started to see good accuracy and coordination, and what we want to see from the robotic arms interface with the software and the laser source. So we did have some teething issues just getting reset. So welding rates are going up. We need to ensure that we're achieving the accuracy and the precision that we're after. We're talking about nanometer accuracy. When you look at plate-on-plate joins before they weld, they're like 1 or 2 millimeters. So that's the precision we're looking for. So the contact between plates and plate on plate with no gaps is important. So we're going to see ramp up of welding through December, and that should see us on track for our ambitions to be complete in the first quarter, which then leads into testing.
Martin, while we're sort of working on the operational side of the business, given it's not an element directly within the company's control, but can you give us an update on what's happening with the grid allocation as well?
Yeah, so that's the responsibility, obviously, of our H2 supply partner being Norwegian Hydrogen. So for context, for I guess the listeners, if you want to apply for industrial power supply here in Norway, you make an application to the grid operator, and you're assessed against 8 criteria to be considered mature. So that application was made by Norwegian Hydrogen back in 2022-23, and at some point they were 20 odd in the list, and now it's transparent. You can see online that they are now number 1 in the queue. So we do know that we've been able to maintain together with them elements of maturity, and I understand that there is a timeline and an outcome that is due, hopefully in the very near term. So that would be an important catalyst to reconvene the project timelines and get moving on the next phase.
I understand you've sort of had a site visit, had the partners through to kick the tyres, or at least look at the operations on a first pass level. How did that go? I mean, what was the aim of it initially, and how did that go? I guess I would always imply were a bit impressed about how it's happening.
Yeah, definitely, Andy. So we had some common interest partners, being Carolan from both the Tokyo office and the London commercial team. We had Yenson, obviously we're developing on the CO2 side, and we had Harbour Energy, who's the other development partner on the actual injection asset, and then also our advisors Clarkson. So that was the week before last. I guess what was important for everyone to see is that when you look at models and 3D diagrams and PowerPoint descriptions, it's very difficult to understand the precision of what's been doing. So this layering of plates on plates using robotics, that's the new part. So collectively, they've been able to see the precision. They've been able to see seam welds and stake welds, and they've been able to touch the plate post laser hybrid welding to show that there is a real lack of heat that goes into the plate. So all the elements of speed, precision, the minimal amount of energy, and the benefits we get from that, they get to be sort of viewed firsthand. So already we've seen strong feedback from Carolan. The technical teams looking at both from the hydrogen program, which is core, and then with a view also what's happening on the CO2 side. Yinson clearly are supportive of what we're doing. So for them to see layers of plate on plate, that's the first element which has been transitioned from the H2 tank design to the CO tank design. So again, they're seeing what they're going to be getting firsthand.
I guess the other interesting thing in terms of, or what strikes me about Provaris being the size of the company is the quality of partners you're attracting to the process and to the business model. And I guess recently, and it's one that's sort of a little bit left field because I would never have associated an oil field services company with what you're doing, and that's Baker Hughes. Being an old oil field geologist, that's a big name. It's as big a name as you can get in that industry. If you can remind us what their role is going to be and the level of engagement with the current sort of provisioning work going through and sort of the design model of the flow is going on.
Yeah, it's a great point, Andy. I mean, Baker Hughes have been around for many decades. They've been the global leader in compression across all number of gases. What we did with them is that we took our design for both sizing of compression equipment, the energy requirements, capital and operating costs, and plot layout, and we matched it with their engineering teams. So they looked at their equipment list to see what was applicable, and 100% of the equipment that they would choose is off the shelf. So there's no R&D component for them to put equipment into our compression facilities. They then verified capital and operating costs, but most importantly, they reconciled our energy use and thermodynamics model to show that when we talk about 1.5 kilowatt hours per kilogram to compress and load a ship, that's been verified. So when we say factors of it's 6 to 10 times less than the alternative approach, be that a cryogenic or a chemical liquid, that's now being verified. So they will then be involved in the engineering design of compression plants going forward. And I guess the prime example is projects like the one we have with Norwegian Hydrogen here. So they will come in, do some front-end engineering design of the plant, provide costing and elements. So it's been a big verification step, and they're now actively working with us around project opportunities.
Okay, they're a good get. As I mentioned, I didn't think that was a sort of a natural add-on or sort of a natural fit within the model, but within the compression stage, it just looks, now that you've done it, it just looks obvious. So
yeah, I would say it took a year to get them to put their moniker out. So it is an extensive piece of work.
So the operations sound like they're going very well. There's been, I guess, more noise in the ether around the macro overview. And again, one of the very strong material points of differentiation as an investment story in your model is that strong level of engagement, particularly in Europe, by government in the regulatory infrastructure financing end of sort of the energy transition. And I was noticing if there was any sort of differences or any sort of headwinds in the background that you're noticing, or is that level of engagement still very, very strong?
Yeah, I'd have to agree with you. There has been change of strategies. The engagement has differed at different groups that we've been talking to over the past 2 years here in Europe. There are still many that have stayed the course, but what they're doing is, I guess, what we've seen collectively across their strategy, they're withdrawing from the large capital projects because cost and demand are two drivers for any market. So I don't think we can avoid that statement. But what we can say is where there's been big capital projects referred to as hydrogen, they're really ammonia projects. And I guess cracking facilities and the complexity of that and capital required for that process is taking longer. The demand for ammonia is a bit different to what it is for the use case of gaseous hydrogen. So what we've seen is a narrowing focus in some areas to say, well, your scale, your FOB price and your delivered price is applicable in a range of what's deemed to be acceptable to be sold. So I think it's going to take much longer to get to the large scale projects to be bankable. the price needs to come down and the demand profile's up. But Europe is still focused on its decarbonisation pathways. Yes, there's challenges around price and delivery, but we still see ourselves in the sweet spot. And in fact, we still see the right level of support that we need to get at least one project off the ground.
Yeah, I've always struggled a little bit in terms of the ammonia aspect of it, from the point of view that it's almost double handling of product, forming it and then sort of unforming it, cracking it at the back end. But the level of engagement with hydrogen itself as a pure source?
Well, Germany has approved the plans for the hydrogen backbone. They've approved the financing, and they've now got construction underway. So they're going to need volume, and that moves gaseous hydrogen. It doesn't move ammonia. So what does that say? If you can deliver a gaseous hydrogen at a relevant price and be simple and efficient in fulfilling that pipeline, well, then you're 3/4 of the way there. Yes, there's still a price point. So ammonia sector, unfortunately, was looking for leadership from the maritime. IMO made a decision to delay its decarbonisation plans from a fuel perspective. We've seen some refiners pull back on the scale. And I guess what's that seen? It's seen a free focus on many fronts towards CCS and CO2. So while the large-scale hydrogen market might take longer, we think our scale is still relevant. And of course, we now have another foot in the other side of the camp is if you can't eliminate the emissions, you need to capture and remove.
Yeah. I was having a bit of a wade through, and thanks for the reference when it came through, the DMV, most recent DMV Energy Transition Outlook Study from October. It's a fantastic document. It's not something you can sit down and read in a day. But there was a great quote within that, and I always like little throwaway lines and they state in there that the turning point for CCS has arrived. They do throw out sort of a forecast where they can see maybe to 2030 that uptake on CCS, it could quadruple, and that timing is approaching probably more rapidly than they had anticipated, and certainly we had anticipated. And we had noticed that within our last update, where we said that the CCS part was accelerating much faster than we had modelled. So how is 2026 looking for the LCO2 stream on a stretch target? And I guess without committing yourself anything or putting a stake in the ground, what should we be seeing as sort of deliverable outcomes over the course of next year, given you're in feed and going through tank design, etc.?
Yeah, so we've got two phases of the feed program. One is up to December, and the second phase is to June. We've been told by Yenson to be FID ready in terms of the tank design, which is being integrated into their FSRU storage and injection unit. They plan to be FID ready on that unit, so that means it needs all the classification approvals, the feasibility of construction of the tank, which I'll come back to, and obviously the design of the vessel. So they want to be FID ready, and that's a statement that they've made. So that gives us good visibility of the push that we have to be in a position to take an investment decision on an asset using our tank next year. I think that's quite clear to us. We've also seen that, as I mentioned, there's been a new heightened focus on CCS. US has the luxury of CO2 pipelines, and it has fields for sequestration, but Europe doesn't have that luxury. So they're going to need to move it to the ports and then ship it. Norway is already the leader in terms of the Northern Lights project. It's the first dedicated new CO2 injection offshore field. So those ships come from parts of the Nordics and further afield in Europe, and then they're then injected here. So Yenson and Harbour are developing a 10 million tonne per annum field, which is offshore, which requires the shipping element. So they have a 2030 ambition to be operating. There's typically 3 years to construct these assets. So the readiness that I mentioned there, that date of 2026 is fast approaching. So what they need to do is fulfill contracts for CO2 offtake or supply and then further injection, which I know is taking place. So they're pushing us hard. So the challenge for the scale that they're talking about, they need new tank designs. And we've been through this. So they had a previous concept design of their FSRU, which has 16 tanks. Now it's gone to 4. So likewise, we're now having conversation with ship owners and designers of using that tank we have into large carriers, say 40 to 50,000 ton carriers. So we see a second market predominantly using a similar tank, just integrating in a different way within the hull. And then we've been asked to look at 20K medium pressure, elevated pressure, and different variants of what we have. So there is a broad opportunity. There is a level of acceptance from the traditional oil and gas or energy players. They like the product. Shippers like the product because they're dealing with the same relationships. So there's already a strong acceptance of the opportunity. And I guess what we need to do is get through class feed. And what we're also doing now is we're working with fabricators in Asia to make a statement around the feasibility of constructing these large tanks in a fabrication facility attached to a yard. So that's an important step, and we can make some updates on that shortly. So yeah, we're very pleasantly surprised at the pace of which has gone, and we're not the leaders in this. We're getting pulled into it. So Norway is the prime opportunity here to be the first mover in that sector too.
Well, I always like that aspect of it, that first mover advantage that you get. It doesn't mean there won't be more in that space, and it doesn't mean competition's not going to come up. But I think it's the value creation for me comes in the innovation and having that head start. So I think what Provaris is doing is in terms of progress, I think is fantastic. And I think in terms of the business model as well, I think you've got a good opportunity to really progress that in now 13 months to the end of 2026. That's all from me, Martin. Thank you for the update.